Good morning all, how are you all doing? Oh, looking a bit yellow today. Good. Maybe it's my eyesight. How are you all doing? Morning Christian, morning Kennelly, Peter, JC, Amy, Danny, Virginia, Gulmani, Martin, how are we doing? Another Thursday, exciting day ahead. Big news today. UK rates, it's going to be a biggie. So this morning we've had the Swiss franc CPI, which came out as forecast. No movement off of that. And then 12 o'clock, we're straight into the interest rates for the pound, expected to go up to 5.25. So going to be a big day today, especially for the pound anyway. Should get a decent movement today. So we got Bailey speaking as well at 12:30. That's the press conference. So that's where we're going to get the movement today when the press conference is announced, and we get the forward guidance. And then this afternoon, we've got unemployment claims ahead of the open. And then we've got PMI after the open. So it's going to be a very tricky New York Open today as well, because we've got news before and after, which could well add lots of volatility before the open, get rid of the volatility for the open, and then have a spike afterwards. And that'll be the end of the session. Might be a crappy one this afternoon, but we'll see. Wait and see what happens. So that's today. Big day. Let's have a quick look at overnight news. We've had some, the Australian trade balance came out, which was positive, which is massively impactive. So overnight earnings, Robinhood up. If you go up, I'm just looking for any important ones. AMD, forecast US credit downgrade drags down chip stocks. That might explain why the markets are collapsing in the US ahead of the open. Apart from that, not a lot. No. Okay, so that's the overnight news done. There we go. Morning, Andres. Morning, Day Trader FX. So, so 12 o'clock today, then 1:30, 12:30, 3 o'clock. So basically from 12 o'clock onwards, total carnage. Interest rates today, I'm kind of 80 to 90% on that 5.25, but there's 10% of me saying he's going to freeze it. I don't think he will, but there is an outside chance because the CPI figure came in so low. There is a possibility, but a bit like the Aussies, that's a big mistake. But yeah, there's a good chance. Jesus. Watching the US indices ahead of the open. It's lovely, I'm short. I took a short. I saw a really nice range and I took a short. I got 2.5 grand sitting open at the moment on this Dow. I'm targeting 3 grand because that's all I can bank a day at the moment. 2, 3, 4, 5, 6, 7, 8, 9, 10 ticks away from it. So one more little candle down, and that's me done for the day before the market even opens. How good's that? I'm going to stick a break even on that just while I'm doing this because I won't be concentrating on it. But I'm going to hold that, see if we can get down a little bit more. Morning, John. Morning, Raymaker. Hello there, Lizzo fans. Lizzo. Not going to comment. What was I talking about? News. So lots of news this afternoon. Yesterday banked, how long we got to the open? 4 minutes. So yesterday banked 1.26% on Euro Swiss and New Zealand CAD. So got out, that was the day before. So it's just Euro Swiss yesterday. I could have sworn I banked something else yesterday. Must have just been Euro Swiss. So yeah, out Euro Swiss yesterday. Pretty much the perfect exit This could well obviously continue up after this spike down, but that's where I got out, and then obviously it collapsed yesterday afternoon. Swiss franc rallied like crazy yesterday, so expecting a pullback on these Swissies today. The Swiss inflation figure obviously came out as expected, so there's no positive or negative bias off of that, as you can see. So we'll see what happens with that, but yeah, just all meh at the moment. What lot size did I go in with the indices? 10 short. So sitting on 1900 open P&L, 10 contracts short, 2 entries on there. So basically I took this low here. I took an entry there, which is a break of that low. And then I added one here on the break of that low. So you can see my average is there, the blue line between those two. Yeah, sitting on 2K. So target is there, look, 3K. But this is an evaluation account, so I can't bank more than $3,000 a day. That's the maximum. They won't include any more than $3,000. So I'm capped at 3, which is fine. But when you get funded, obviously, if that was a funded futures account, I wouldn't be targeting 3K after a drop like that. Pre-market open, if the DAX drops on the open today, that thing's coming down hard. So there's a 10 grand day there. So you just put a few trades in for a week and then pull that money out. You're done. Right. So speaking of indices, let's have a look at the DAX. So we've got this gap fill. We're down at yesterday's low at the moment on the DAX. We've got this big gap fill to do, and it's a big one. So yesterday we dropped at the open straight into support. I said, watch this level for a bounce. We got the bounce. It came back down, and that's where we stayed. So we've gapped down again today. We have filled the gap already, and it's obviously coming down. The whole market is coming down at the moment. They're selling off hard. So the fact that we're down at yesterday's low and we've already exceeded that, I suspect that there is a lot of sell orders this morning pre-market, and the limit orders obviously haven't held up that we were in place. So there's a good chance of a downside move on this today. But whenever we've got a gap, remember I said yesterday, if we break this low and we hold this low, this is the next target. Yeah, 175 ADR today, all the way down here is our next potential support bounce point, 125 to 175. So there's a long drop if this goes, and it is going already. So we need to see what buying pressure comes through at the open. If this breaks and holds back above yesterday's low, I suspect we might have a crack at the gap fill. But the gap fill's 175 ADR a day away, so it's not going to do that today. It's going to need some serious stock earnings today to get up there. Speaking of earnings, okay, market. Oh, you get. Just missed my TP. $3,000 before breakfast. Thank you very much. I'll take that. Flat. Out. Done for the day. Very nice. Sorry, I love it when that happens. Doesn't happen very often. So today we've got pre-market E. What's E? E. Estimated. Oh, okay. Okay, so we're expecting Alibaba. Does that mean expecting it or estimated earnings today? We've got pre-market, we've got Fiverr, Moderna, we've got Ball, and we're going to. This is movement that we're seeing this morning is the reaction to the aftermarket yesterday. So yesterday's aftermarket, we had Shopify, Qualcomm, PayPal, and Etsy, the big names in there, and obviously Unity a little bit more as well, a little bit less. But so those are the big names that we're reacting to today. And all of this pre-market will be this afternoon. And then aftermarket today, we've got Apple and Amazon and Airbnb and Coinbase, Gilead, huge. So big names this afternoon. So tomorrow we're going to get a decent move as well. So lots of potential movement on the cards with the stocks. Your opening range breakout on the DAX, if you've taken the pre-market, obviously it's gone already. It started going before the market opened. So we'll see if this holds. So this is the initial cash balance going in on this candle. We've had a pretty decent pre-market move already. 1856 is ADR. Pre-market, we've dropped 600 pre-market. So we've dropped a third of an ADR pre-market. And this opening range going in at the moment is getting close to a third of an ADR. So we're putting in 2/3 of an ADR in 4 candles as the market opens. So the chances of getting a big, strong speculative run today are either very low or incredibly high, because they're just going to jump on this and they're going to drive it beyond ADR today. So we're waiting to see what happens. But the pre-market was quite a big range today. So if you're on that, you're in, but you're only 1-to-1. If you're going to take the 5-minute opening range, which is the kind of the safer entry, it's going to be a big one. So kind of just want to hit the short button on this, but look how close we are to ADR. Yeah, we're 40 points away from ADR in the first 5-minute candle. It's a tricky one to read today, so just be a little careful. But downside, I'll draw a line in on downside so we can see it. There's 2 areas I see at the moment there. I mean, it's somewhere around there. So this area here, on this day, we pushed up, we paused, we hit that, and we paused at that level. That is a previous level that we've reacted at a couple of times. Not particularly strong, but that's the first level I can see of support, which is just beyond ADR. So we're very, very close to that already. Below that, we've got these lows here, which we tapped up into and rejected. But it's all kind of part of this area where we pushed up into twice, then we pulled back, used that as support before we bounced off. So that's previous support, turned into resistance, turned back into support. So this whole area here, which is this purple line, 175 ADR, which is a monthly low, that is your second area. So as we get to that area, watch for a bounce. If that doesn't hold, there. So if you're looking for TPs to the downside, those are the 2 levels I see, both beyond ADR today. So tough one today. However, that is the big fly in the ointment as well. At the moment, they're not going to leave that in place. That's getting filled. But, you know, a bit like that one there. Yeah. Might take 3 or 4 days to come back to it. We'll be back up there at some point next week. So we might be back up there today. You know, it's impossible to tell. But it will move on earnings. We've got massive earnings coming out today. So see where we go. But yeah, there's your 5-minute opening range. 2 seconds to go. So there's your 5-minute ORB. Absolutely huge today. That is 746 off of 1856 ADR. Huge. But it also means there's a hell of a lot of momentum and a hell of a lot of stock movement going on today. So if there's that many people selling stocks at the open, it could well tank. We'll see. It could be a big day today, straight down. We'll see. So I'm not in that today. Too big. I've obviously made money on the pre-market anyway. Well, I haven't, because it's only an evaluation. It's not real cash, but it will be. If I could stop screwing it up. I get too aggressive on Top Step, and I keep doing silly max loss days. But then I have these days where they completely undo the max loss days. So tomorrow I can pass that if I have another 3K day, which is the beauty of Top Step. You only need 2 3K days. That's 4. 2 3K days to pass. Morning, Dredge. Morning, Astro. Outro even. Morning, Marco. So we'll watch the DAX, but that might be a tricky one today. So let's have a quick look at ADRs. So news today, obviously 12 o'clock. I'm not expecting a massive market today in Forex. When you've got a big news event coming up, actually there's three big news events really coming up today. Unemployment claims not quite as much. It's the unemployment rate that we're interested in, but unemployment claims gives a clue as to the unemployment rate. So yesterday's unemployment change was positive, meaning that more people are employed. So the unemployment claims today should be negative, because if more people are unemployed, they do not claim as much, which is positive US dollar, leading to the unemployment rate likely to be positive on Friday, which is positive US dollar. So the unemployment rate, to be down on Friday, which is positive US dollar. So this is all coming out today. So it's unusual for the market to want to put a lot of money in directional movements before a news event, because the Bank of England rate, depending on how that comes out, is going to decide and determine whether or not they want to be buying more pound or selling their current stocks based on what that interest rate comes out at. Typically, when you get an interest rate rise, it tends to be positive for a currency. But as we're getting close to terminal rates, it may be that Bailey comes out and says, as we had such a high CPI drop, then there's a possibility that we will not need to be as aggressive on interest rates, because it's the only mechanism they have bringing inflation down, interest rates. So if he comes out as kind of a little bit bearish and like, we don't need to put it up, we might get a negative reaction to that positive interest rate rise, which is what we got on the euro. So it doesn't mean just because it's going to come out as a higher number, it's necessarily going to be a bullish move. The market may well be factoring in now. Terminal rate is coming in October. Where are we? August, September, October, So terminal rate of 5.75 is easily achievable. And if he alludes to that in the press conference, the market will probably be a little bit more bearish on it. So we'll see. We can't tell. He may come out and say, even though CPI came down, we've had to put the interest rates up because the underlying core inflation, which drives the majority of it, is still not going down as fast as we want, in which case then the market will react bullish to it. So we'll see. We won't know until then, and it doesn't matter really, because you can't do anything about it. If you enter into a pound now, it's either going to go up or down. So you haven't got a choice. It does what it does. So there's no ADRs today. There's a lot of weeklies, which we've already looked at this week, but there's no ADRs to look at so far today. The Swiss franc, as I said, hasn't had a lot of movement on its news yet, so there's hardly any movement there. Aussie's completely flat today, so there's no movement overnight in Australia, just total sideways rubbish. The yens had a little bit of a weak move, but that seems to be undone now in the beginning of London, at the end of Asia. So no movements on the yens. The euros, as you can see, totally flat. The pound at the moment, totally flat. I would expect just to stay in rotation for the next 4 hours. So just not going anywhere. Not going to stick a load of cash into this ahead of the announcement. They piled out of a load yesterday, which is interesting. So if you look at the, actually that's more Canadian, wasn't it? Yeah, because it went into the euro. So you see all the pounds not really going anywhere. New Zealand flat as well. US obviously doesn't move much in Asia. So there's no movement in Asia. I'm not expecting any movement in London. So this afternoon in the New York session is really where I think we are going to kick off. And that's pretty much all we're going to get today. The main news today and the main reactions we're going to get in the market are going to be based on that pound movement. So we're all waiting for that. Oil yesterday, we had a decent move to the downside. This was 18 is ADR. This was 33. So massive move on oil to the downside yesterday. So we had the oil inventories come out as a negative 17 million on a forecast of 1. So the market before the news, actually, because the news was at 3:30, which is 17:30 on my account. Yeah. So this move here happened pre-oil news, and then that was the oil news. Yeah. So they pulled down into this area that I said about these two lines that I drew yesterday. They pulled straight down into this area and paused. However, it does look like it wants to go another leg. So we're looking for a pullback on oil. And there's two distinct pullback legs that we can look at. That one there, you are at 38. Yeah, so this is if we're going to do a shallow pullback and go for that 83.5 a barrel, this is where I'd expect the bounce to come from. However, you've got these levels down here, these two propulsion gaps, which is that initial resistance we hit and did the pullback before the next leg started. So that is also a very good level to consider today. So if we can get down to 125 ADR today, that's a beautiful buy on oil with a very nice risk reward ratio. Here is also a possibility of bouncing. So you could look at taking along above a high, wait for an M15 reversal alert, maybe going long on that. So that's the scenario on that being the leg. Yeah, the other scenario is that we are going to pull back on the entire move from July rather. In which case then this is where we'd be looking at as a 38 retracement, which is roughly the same as that 61.79 retracement on the shorter leg. But you've also got obviously a much deeper pullback potential. So difficult call, really. If you look at the last leg we had here, look at the distance, and then look at that leg and look at the distance, it's pretty much the same. Look at the pullback, look at the pullback. Yeah. So that's what we did last time. That's what we've done now. We are exactly at that point right now. So potentially you've got a nice long opportunity here. So today, I think this is worth keeping a close eye on M15 dropping down. We've already had the reversal alert, actually. So the reversal alert kicked in yesterday on M15. So for me, if this breaks this low today, we've got potential for a drop. If this touches this low or just sweeps this low and pulls back up and stays around about this area, pending order above that high is basically a kind of W pattern reversal. So if it does break down below this low today, this is going to get invalidated. That alert is not valid anymore. Your reversal alert will jump to that candle. Depending obviously what price action does down here, it might be lower, but that initially will be where it will jump to. So that would be your entry. 83.5 is your target. Yeah. So let's say, for example, price action does this. Yeah. You take the entry there. That's a pretty decent risk reward ratio. Easy trade. So yeah, looks pretty good at the moment, oil, but obviously just bear in mind, this is scenario one. There's multiple scenarios that could play out here. So this would be exactly that. Yeah. If it's not that, that is the second place I'd be interested in taking along, somewhere around about 125 ADR reversal alert down there, if it gets there. Yeah. And if that leg is not going to hold and we're going to invalidate that leg with a new low, we're looking for a pullback short down to here. We'll see what happens, but there's a good opportunity on that one today. Let's quickly look at the indices. So no movement. We're done. The DAX is done. Look, 15 minutes sideways. So we might get a move on the DAX. If you took the pre-market, you've been paid. If you're going to take the 5, you're waiting. So there's no trade on the 5-minute opening range, but you've pre-market, you're already done. So wait and see what happens. The US is still selling off though. Look, Still down on the US markets. So all these earnings, obviously not good. Dow target is yesterday's low, which is here. Not far to go on that one. You got 99 points, 90 points, depending how you're measuring it, to the downside. Morning in. My Forex funds have indicated they will be decreasing the leverage for CFD to 1 to 50. How does it impact lot sizing? Well, it doesn't. Lot sizing is lot sizing. Yeah. If you're using EAs, it doesn't make any difference. It's all calculated for you, so I wouldn't worry. Obviously, from a position trading perspective, that will cause a problem if you're trying to position trade. I don't, so it doesn't. On grey, do you trade oil manually? Yeah. Well, sort of. So, for example, on oil, if I want to take a long on this, let's say, for example, as I just said, that scenario, it breaks down there, you're going to get a support rectangle form. So basically, I can stick this on the VPS and just say, take the next reverse alert long, and it will just get me in. So I can use the EA to trade this automatically, which means I don't have to watch it. Depends how the day goes. What I quite often do with situations like this is I will set a manual alert rather than taking a trade or setting a pending order. So right now, I see that as a decent entry or that as a decent entry. So what I'll do is just quickly set an alert there to get notified when we get to that level. Didn't copy my WAV file over. I had a different alert to that, but that'll do. So yeah, so just set an alert, and then I'll be notified when it does, and then I can have another look at it. Easiest thing to do. Or stick the EA on, it's up to you, but easily manually trade it. Gold, please, Ian. Okay, Duresh. Somebody was paying attention yesterday. That's not gold, that's John Wick. DAX is just double bottomed. Holding at those lows. Right, so gold obviously will... Oh yeah, sorry, yesterday. Yeah, so it's bullish US yesterday. So gold came down yesterday off the bullish move. We're back mid-range now. So you've got this nice area coming up here for potential support, which is exactly where we are now. So we broke down, pushed up, kept testing this area, and we finally smashed through it. This is our first test of this area where the price discovery moving up was formed. So propulsion gap target to the downside, you've got tons to the upside though. So it's a very difficult one, this. I'd be wary of taking anything ahead of non-farm payroll, obviously, because when the unemployment rate comes out tomorrow, we're probably going to get a decent move on the US. However, we've had lots of non-farms that haven't done anything over the last couple of months. So, but obviously this is just the US dollar cross. So difficult to tell. At the moment, we've sold off fairly hard for sort of 3 days. So there's a good chance of a pullback, I think, intraday today. But like anything, they're not going to put a load of money into the US dollar ahead of the interest rate announcement for the pound because they don't know where they want their money to be. They might want more in the pound, in which case they don't want to pile into the US dollar, then have to pull it back out and put it in the pound. So could go either way. But it's more upside targets on gold than there is downside at the moment. The question is going to be, are we going to be bullish or bearish off of the news tomorrow? So that unemployment rate tomorrow, if that goes up, it means that it's going to take inflationary pressure off of the interest rates, meaning that it will likely dump the US dollar, which means you want to be buying gold. If the unemployment rate drops tomorrow, it means the Fed have got more free rein to increase interest rates, get on top of inflation faster, which means that will be bullish US, which means you want to be selling gold. Don't know. One of those two things is going to happen tomorrow. But right now, you're stuck in the middle of nowhere. I'm not the best person to ask about gold because it's not a good position trading instrument because it's too volatile. So I would never take a trade on it unless it's got a stop loss on it. And if you're going to take a trade with a stop loss on it, do whatever you want. You've got a 50-50 shot of it working. So, but long term, it's just controlled by the US dollar. So, itchy nose. US dollar CAD 125 of its weekly range. So we've got some movement on the US. Oh, off. US is off to the upside. We're just coming up to a monthly high. Good level of resistance up there. US dollar Swiss, US dollar yen coming down. That looks like a strong yen. Yeah, we've got good strong yen again today. Big strong movement on that yen to the downside. A little bit of upside on the US dollar. Not massively though. Huge. Would you describe yesterday's price action on the NAS as a trend day? Yeah. Beautiful ORBs yesterday. Absolute screamers, weren't they? Yeah. It's a collapse, basically. There's only two types a day on indices. Rotation. Yeah. Or trend. And trend is collapse, basically. Basically, a trend day is where we're moving in a direction. It's a bit of a wrong terminology to use, really, trend, because most people class trends as that. Yeah. Which is kind of right. That's market structure. And ranges or rotations as sideways. Yeah. Which can obviously go a little bit higher, a little bit lower, a little bit whatever, but sideways, basically. When you're moving like that, that is a trend day. It's just got two legs. You got the Frankfurt, you've got the Globex session, and then you got the New York session. It's parabolic to the downside, but it's all part of a downtrend. So the trend in stocks at the moment in the NASDAQ is down. So it is still down. We're still trending. So this is the pullback next leg. Yeah, that's your market structure. Look, high, low, lower high, lower low, lower high, lower low, lower high, lower low. How far we're going to go, we don't know. But if we're going to put in a continuation on the trend, we're going to put in a lower high, then a lower low. So yeah, totally trend day. But some people would class this as a parabolic move, which it is also a parabolic move, but it's part of the trend. Trend days are the days that we make a fortune with the opening range breakout EA and the strategy, because these days, whether it goes parabolic for 30 minutes without a down candle, up or down, whatever, fine. If it wants to go like that on its way, fine, I don't care. But the days we get those breaks and those breaks go ADR, those are the days we make all the money. So the trend days we make money on, the rotation days we can make money on, but it's a lot harder. It's a breakout strategy. Weekly range here on the Aussie dollar yen. This yen's really powering today. So first half an hour of the day off. Let's go US dollar yen. I haven't got a target on this. Oh yeah, so I haven't looked at my positions, have I? So US dollar yen. Got into that on, where are we? Tuesday. Had an out on this. Well, I had an opportunity to take this off yesterday. Wasn't very much. It was a couple of $100, so I left it. Obviously, it came straight back up and did a V-shaped recovery, and then broke the high this morning. So back into profit on this, but really in the lap of the gods with the US tomorrow. So targets to the downside, obviously, there's multiple propulsion gaps. This is what I was holding out for yesterday. We got a bounce off of that propulsion move there. So that is still my target. In fact, what I might do is actually adjust that now there, because that's 125 ADR. Obviously, as we've pushed higher, I'm being a little bit more cautious with the exits. So obviously getting out down there is makes more sense. US dollar CAD, single on that one at the moment. That entry was taken yesterday, last night. So that is an H1 RSI extension. Your M5 reversal alert happens towards the end of the New York session last night. Target to the downside. That's obviously the closest propulsion. We've got that one there as well. What I might do is just look at that low, which is 125. So this high, we acted as support. So this is the previous day's low. Unlikely we're going to hit this today because it's going up. But if we are going to pull back and continue, that would be a kind of a double bottom. So I look at that as a target. We'll see where it goes, obviously, and just adjust targets on the way. Pound US dollar, still in that one as a short. Sorry, as a long. 3 positions on that one. My third position, unfortunately, is all the way down here, which was taken yesterday in New York because we had that big drop yesterday with the US. I've just done gold hit rewind. 1440 entry. So that was 1.5 ADR. So between this entry here and the entry here, that's 1.5 ADR. So my average is actually over an ADR away already. And we've only got 3 positions on just because of the speed of drop. Hasn't been any reverse alerts. Haven't had a chance to get an extra position on. So the average is already a little bit far away on this one. So I'm kind of hoping for negative US dollar news today and massively positive news. So it'd be lovely if we can talk the market up. So with this one, propulsion gap target is there, which is 200 ADR. So I'm going to leave that in place today at 200 ADR because on a interest rate day, if we get a lot of unexpected announcements from Bailey, or that rate for any reason went up to 5.5 unexpectedly, we're going to get a 200 ADR day. So that is a valid target if we get a big, strong pound day, which I don't think is going to happen. So I'm going to wait for the news to happen, see what the reaction is off the news. If we're sitting up at sort of 125 to 150 ADR, I might consider taking this off today. It's not going to be a lot of profit, but it's been a struggle to get into positions on it. So they're very well spaced out, which makes the exit harder. So as we've got a bit of a harder exit on this one, it makes more sense to try and maybe get out at 150 ADR. 150 ADR is achievable if that interest rate goes up and Bailey is fairly bullish, maybe even neutral. We might get a 150 today. However, there is obviously the possibility of it dropping. And obviously, we'll deal with that as and when it happens. But so target, depending on what happens, I might adjust it down to 150 ADR and look to get out on that propulsion gap because that may well become an orphan propulsion gap and we might leave it well behind. So we'll see. Euro New Zealand in, just the one short on that at the moment, targeting the lowest propulsion. Not going anywhere since I got in. Euro odd. Extended to the upside, again targeting that propulsion gap. Waiting for some drop on that one. And Aussie US. So Aussie US got into on the RSI extension on Tuesday. We had another down day yesterday. I knew this was a risky one because the Aussies obviously had bad news. Then it was followed by New Zealand dollar bad news. So took that one off there that long. So scaled into that one with a second entry yesterday. Not gone anywhere so far today. So we're embedded on the RSI. Yeah, and we've got lots and lots of propulsion gap targets to the upside. So at the moment, targeting, I'm just going to move that down a little bit into that propulsion gap there. So about 150, 160 ADR up into this propulsion area here. So if we're going to do pullback, yeah, I can get out there. So that's what I've got on at the moment. RSIs, there's only 2 RSIs to look at today. DAX has broken the lows. So you're selling straight into support here. Well, not into support, into ADR. Yeah. So we're selling into ADR. Obviously, this is exhausted. It's done a lot. It's done its average daily range already, literally at the open. So on days like this, because this is driven by stock earnings, because it's earnings fortnight, ADR becomes a lot less relevant, because if they need to sell stock, they will sell stock. They're not worried about whether normally they sell this much and that much. They just need to clear the decks, get rid of it. So in earnings fortnight, you'll see 150, 175 ADRs every now and again. So just don't pay too much attention to ADR today. I'll be more interested in the levels that we looked at earlier, of which one of them is just beyond ADR. It's this line here. But 150, that one there, I think is probably a more reliable support. We're going to see limits triggering there, I think, more than we will there, but we'll see. So if you are short on this already from the pre-market, just be aware of where we are. And if you've got in on the 5-minute opening range break, just be aware we might run out of steam fairly quick. So don't get too greedy with it today. Yeah, I mean, that level that we're we're 40 points away. Yeah, so there's your opening range break. That is that orange line. So, you know, from a risk reward perspective, it's terrible. Not worth taking, really, but too big a range as well. This is what happens after these big ranges. Most of the time when we put a massive 5-minute range in, we just don't have any legs left. Can't get anywhere. So your RSIs today, there are only 2, Aussie dollar, US dollar. We've looked at this one, already in this one. So that is still extended below the 30, 2 entries already on that. And your US dollar CAD, first entry on that one yesterday, still extended. So that's it. Summer trading is officially here. Afternoon, morning, Astro. How about pound odd? So pound odd's extended to the upside at the moment. Obviously, this Australian dollar has had a bad news week, followed by a bad news week on the New Zealand dollar. So obviously, all the Aussies are weak at the minute. Therefore, the pound's taken advantage of that. Today, obviously, you could find this flying all the way off to the upside. So we've broken that monthly high, tested it, and we've pushed back up again. Now we're testing yesterday's high. Got more chance of going up, I think, at the moment than down, but nice propulsion targets to the downside. So they will come back and test these at some point. As you can see, it's same move as this. Look, propulsion gap, retest. All these propulsion gaps are all filled. That's an orphan from news. So when you get news-based propulsion gaps, they will quite often get left behind because it's a fundamental shift. So this is a news gap. That's the Australian interest rate announcement where they decided, nah, we won't bother putting it up. We're really, really screwed with inflation, but hey, what the hell? Let's not put it up. Good one, Australia. That's really going to power up your currency moving forward. If that's what they want, that's what they're going to get. So this one could become an orphan propulsion. So that would be my ultimate target to the downside. That would be much more safer to hit to the downside, but I think you're probably going to get strength on the pound today. So I wouldn't look to short it. It's not extended anyway, so there's no reason to be getting into this. So I'm not interested in it at all. 4 hour, it's not extended either. You had an extension above the 75 last week, but you're out of that. So no reason to be in it, really. Morning, Ratib. Morning, Franco. Morning, Rajiv. Anybody got anything else I want to look at? Because there's nothing else to talk about today. It's a holding pattern this morning because of the news. So I don't think we're going to get a lot of movement. You're going to get a lot of movement, potentially up and down, a bit like pound is doing, look. So a lot of movement, but no direction. Not going anywhere, but we will move. So range bound plays today. If you want to drop down to 5 minute and you see anything hitting a range high like that, short it down to the range low and get out. That's all you can do today if you want to, but it's very hard work, high maintenance, high risk. Just not worth bothering with, really. So I'd leave it today until lunchtime, 12 o'clock. Okay, so DAX is bouncing off of ADR. So literally that should break. We've gone inside bar on the DAX. So we've still got 2.5 minutes left on this candle, but we're painting an inside bar at the moment. So indecision, pause, no direction. Obviously this candle's not closed, so that's just what we're doing at the minute. We'll see where we go. But yeah, potentially this could carry on dropping today. The rest of them still moving down on the indices on the US. We're out of recent lows on the Dow. NASDAQ's the same. S&P is the same. It's all down. All down. Wouldn't want to try and fight this today. Can you analyze the Dow just like you just did the DAX? So yeah, Dow's out the lows, obviously. We got propulsion gap targets galore on this. So this is the thing about, this is why it just annoys me, about having having a time limit on, especially with futures. Like I said, I just banked $3,000 this morning on that one trade pre-market, and I could be sitting now in 10K plus probably. But you can't because they won't let you. Very annoying. But if you want to trade your own futures account, you need an absolute bag of cash. So very annoying. But yeah, this I don't see stopping for any reason, really. We're breaking this low here. If this breaks and holds below this low, as it looks like it already is, because it's not stopping at the moment, you've got these areas here, all potential bounce points. Yeah, so these were the pause areas before the pushes. Yeah, so every propulsion gap you can see, obviously, is a potential buy area because that's where they bought on the way up. So there may be stocks needing to be purchased at these levels, especially in here. But this is all 200 ADR. So there's nothing to stop the Dow coming down, really, if you look at it. I mean, it's just really hard to pick a level, but that level there is a very, very obvious support resistance. So this weekly low that we've got here is this level. Yeah, where we bounced, previous support resistance area. Yeah. Then the next level is there. Yeah, which is this orange line, which is 125, 115 ADR, 120 ADR, something like that. If that breaks, there's just clear air all the way down to that resistance, which will be tested as support, which there will be limits sitting there ready to buy up that level. So there's nothing. So I mean, it's when you've got obvious support resistance levels, trading becomes so much easier when you can see areas that price has reacted at before, at least once, if not multiple times. When there's clear air And if you break that clear air, those are the trades you've got to try and hold, because those are the ones that are going to make you an absolute fortune. You know, you can bank 10% on one trade like that. You've just got to sit and try not to break even it, because if you break even this, if you're short, yeah, wherever you got short, say you got short there on that break of that low, for example, if you put a break even stop there, you will break even before that drops, because it's going to pull back on that move. Yeah. Got to be able to hold your nerve and keep that risk in place to get that reward. It's very difficult to do, especially intraday, because it's not going to get there today. It's going to, wow, it's going to take something pretty catastrophic to put 225 ADR in. You know, look at the biggest day we've had on the Dow in recent weeks. Probably that day there, we did 495, 294, so 300 is an average ADR for the Dow. That did 500, so that's kind of 155, 160 ADR. That's the biggest day we've had. So if you think from where we are today to put in a 150 ADR is there, yeah, highly unlikely you're going to get any further than that today, if they can keep this momentum going, obviously. But it's going to need to pull back. Yeah, it's not just going to go parabolic all the way down. It's going to pull back before it does that. Yeah, it's going to do this, it's going to do that, then it's going to do that. Another thing you can do, if you want to put a stop, if you want to trail a stop just to reduce your risk down, look at what's typically happened. So scale out on your chart and look at large moves that have happened in the past, like this one here. Look at what its pullback was. Yeah, this is why we use fib. Fib is absolutely critical for measuring pullbacks, because it works. It does work. That I can tell you right now is a 71.9 retracement. I don't even have to measure it. Yeah, you can see the retracements. I can see that 38 retracement there. Yeah, 38, 71.9, 50s, 61.8s. They work. They do work because of the way the market works with piling into stocks, and then a portion of those people piling out of their positions, but the ones that are holding long term adding to their positions. This is why we have market structure, because if 100% of people that bought sold, you just get an A shape all the time. Yeah, the reason we get market structure is because only a percentage of the people that make that move start get out of that move, and then they add in again to increase their profits. So those Fibonacci measurements are in the market for that reason. Which one is going to be achieved, you never know. So if you always trail behind a 71.9 or a 61.8, if you want to be a little bit more aggressive, you'll very rarely get taken out on a trading stop, assuming that trend continues. If it doesn't, obviously, you will get stopped out anyway. But if you trail or move to break even just because you're in profit, you're just telling the market, get me out when you do your retracement, will you, before you start your next leg down. Nuts. Don't do it. You know what it's going to do. You can measure it. Yeah, you can see last time they did that, they did that. Stick a fib on this move here and measure it and go, right, from there to there, from the Globex session to the low, if this is the low of that pullback, right, that is where we're going to pull back to at the worst case scenario, if we're going to continue the trend. If we're not going to continue the trend, it's going to blow through that and put a V-shaped recovery in. But if you're going to trail any stop on it, that's where it should be, above that level. And then if it pushes down to a new low, adjust your fib. And now I can move my stop down to somewhere here and look for propulsion gaps, because propulsion gaps, that accumulation break, that propulsion gap here is where the sellers added all of their position. When they get back there, right, the guys that have taken the profit on this move, these guys that started this move, if they want to stay in it, they're going to add from that position. So again, stay behind them. Stick behind the guy. This is what this propulsion gap indicator is showing you, where the banks and institutions have placed their orders. If they want that thing to continue down, that takes them into a loss. That takes them to a break even. You think they want to go into a loss? No. So they add to those positions, which is why we test propulsion gaps, push away from them. if they want to continue the trend. And again, we don't know that, obviously. You find out after the event. You don't know before. If we knew before, we wouldn't just do what they do, wouldn't we? But we don't. So the Dow, look. Yeah. Propulsion move. Added, 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 added. What are they doing here? Potentially adding. Yeah. This could just turn into a V-shaped recovery and fly to the upside today. We don't know, but these are the clues. Just got to extrapolate a plan, execute the plan, stick to the plan. Plan will either work or it won't. ADR or RSI, which one will give you more weight for position trading? More weight? They both tell you the same thing. They're a condition indicator. Yeah. So a system or a strategy has a condition indicator. That's not a C, is it? A condition indicator and a signal indicator. Bare minimum you have to have in a strategy is a condition in the market and a signal to enter. RSI and ADR are both condition indicators. They tell you when the market is stretched beyond the norm. Yeah, so most of the time, the RSI spends its time within the 70-30 range. Yeah. When it gets outside of that range, it's stretched beyond the normal trading conditions, meaning that we've got an opportunity for a pullback. When it gets beyond its average daily range, which it does 42% of the time, it's extended beyond its normal average daily range, which gives us the chance for a pullback. They're both the same thing, condition indicator. I would always use RSI for position trading because ADR will give you a lot of so basically, if you are up here, right, on the RSI, on your journey from there down to there, yeah, what you could do is hit ADR, stop, go sideways, 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 hit ADR, arrive at RSI extension to the downside. Yeah. If you're position trading using ADR, every single one of those is an entry. If you're position trading using RSI, you're getting in on that massive long move just as they're about to take profit. Which is why this is the bread and butter, H1M5 mean reversion. And that's why when I teach about the ADR reversal strategy, it's an intraday strategy. You should be looking to get in and out today if you can. If it doesn't work out for you and it goes against you, you can turn it into a position trade. But you may well be sitting there in a position trade as entry one instead of down here, which means you could get squeezed a lot more. So RSI is king. ADR is, I mean, it's sort of covered in the bootcamp. ADR is used for a lot of stuff. Targeting is one example, yeah? If you're short on the Dow, sorry, if you're short on the DAX, yeah, that's a great target. So let's say you got in there on the DAX, market opened, you decided I'm going to take a short today because I've got a feeling because of the stock earnings all came out negative, the market's going to drop today. So if you got in there, when you hit ADR, you go, I'll take that because 58% of the time, we don't go beyond that level. So it's used for targeting as well, mainly. Either or. There's no right or wrong. It's just a measurement. DAX skipped my sell limit today. Yeah, I mean, you'll be, if you took the pre-market today, that may well not have got you in. Yeah, this is the trouble with strong pre-market moves. By the time that your broker has executed your orders, the price is gone. So nothing you do. Hit the manual button and cancel your pending orders is all you can really do. Just adjusting orders. Morning, Dennis. Any reason why you chose Robo Forex over others? Leverage. Easy access to leverage. Simple as that. I need 1 to 500. And it's easy to get with Robo Forex. IC Markets, I used to be with them about 10 years ago. Don't think they've got any leverage, so no use to me. It's all about the leverage. For position trading, anyway, you need that leverage. That's one thing that will kill me if for some reason the world decides to go to 1 to 30 or 1 to 50. And it just, I mean, you can still position trade. It's not a problem. It's just you're going to have to run 10 accounts to do it or 20 accounts to do it. 1 account per instrument. Because if you only got 1 to 30 leverage to position trade, you're going to have 28 accounts. That will be a big pain in the bum. Maybe not that extreme, but maybe 10 accounts. I don't know. Cross that bridge if and when required. But yeah, leverage for position trading. So Robo Forex are very easy to access leverage. Axie are good. DAW I trade with, but I don't trade with them for position trading. I use them for stock trading, for index trading rather. Other brokers. Look at my icons. Axie. I mean, you're limited basically by the number of brokers that will allow you an account with a decent leverage. IC Markets is 1 to 500, is it? I haven't looked at them for ages. Yeah, there's nothing. I mean, IC are a huge company, so there's yeah, absolutely nothing wrong with them. Yeah, use IC. You see, when I go through this form, though, what it's going to say is you can only have 1 to 30 because you're in the UK, and then I'm going to go, all right, well, I don't want to be in the UK. I want to be somewhere else. And they'll go, well, we can't do that. However, and you need to speak to the broker because the leverage, maximum leverage in the UK is 1 to 30. So they may offer up to 1 to 500. You won't be able to get it if you're in the UK. They won't give it to you. You'll have to fight for it, which means they will have to move you overseas if they can. That's what I had to do with Axie. Yeah. Axie, I don't trade with Axie in the UK. I trade with Axie in Seychelles. I just realized actually, this is not, they're not UK based, are they? Seychelles, there you go. Oh, right. Yeah, okay. There you go. So that'll be fine. So I will be able to get an account with them. I haven't traded with IC for years. Yeah, I have got an account with them. It's pre-filled. I just haven't used them for years. So. What you said about pullback and trading stop just happened on the Dow. Yeah, there you go. I mean, again, it all depends how you measure it, but that's the move. So this is the thing about when, you know, there's lots of courses out there that and systems and strategies that teach you about using Fibonacci. I liken Fibonacci to in the same way as trend lines. Yeah. You get different people to draw trend lines on a chart, you'll get different trend lines. Yeah. So they're very subjective. Fibonacci is very subjective. For me, looking at this move now, that is where I would measure it from. Why? Because that's where the move started. This is where this propulsion move went in, where the bank started that sell move. So I would look at, this is the move they're making. That is the pullback, 38. Profit take. That's a quick profit take before they continue on their move, yeah? Other people will look at this and go, this is the move of the day. Globex. Therefore, it hasn't hit the 38 retracement. So some people will be looking at this as buyers are stepping in. I'm going to take a long here because we need to do a pullback. So they'll be longing, assuming the pullback isn't done. Again, they may be right. Everything is speculative. You don't know what is what. But for me, a pullback would be on that move there. However, I would also be very cautious about that. So if you want to be super safe, regardless of where you got into this today, if you sit behind that propulsion gap, you'll be fine. If we're going to put in 150 ADR day. But if you got in on the break today, where was the break? It was that candle, wasn't it? So that was the break today, wasn't it? The opening range? Not drawn on here because 950, 10 there. So that was the open there. So that was your opening range break. So a stop up there right now is safe. But when you were getting into this trade, that would have been where your stop is, possibly top of that move. But we probably using the opening range as the stop. There's no. This is why, you know, I keep saying it, and I'll say it until I'm dead, basically. But there is no right or wrong ever, and there's no this is what you should do every time. Every time you take a trade, that price action is going to play out in a different way. So you have to look at it as the trade is unfolding and make decisions. That is your job. You can't train an EA to go, oh, because it did that in that way, I think this, because it can't think. It's a blunt instrument. It just does what you tell it to do. So, you know, every day when you look at something, you might go, well, I'm going to put my stop there because of that reason, or I'm going to put it there because of that reason, or I'm going to put it there because of that reason, or I might not bother with a trailing stop at all today, and I might just go break even on it and cross my eyes and hope. Yeah, you're going to change your decision based on what this thing's doing. It's just broken a low. I would be adding to that because this thing is in parabolic mode. Look at the pullback. We've had one green candle. The buyers tried to take control. They hit that yesterday's low. The sellers stepped in and went, no, this is a break short. So what's happening here is everybody that took the breakout play to the downside today has just added to their breakout play to the downside, pushed the market down. They've added a new position on that short break, and now they're going further to the downside. Yeah, you can see it on the chart. Yeah, there was a load of orders there for a breakout. It did. Yeah, so their market is short. Buyers have tried to push it back up, and everybody that's short has gone, nah, we're short. Okay, we're short. And now all the buyers that went, holy crap, we can't beat these guys, they've all puked. And what have you done? If you bought, you've got to turn into what? A seller, to sell, to get out your order. So they're now all selling. So the sellers are selling, they're adding to their sales, and the buyers that didn't win are also selling. This is why market structure happens. That's what's happening under the hood. We'll see. You never know what's going to happen. And this is what I keep saying. You know, just because that candle's closed down below there now we reset. Okay, so now how many buyers and sellers have we got? This candle is going to be completely different. This could be a massive bullish engulfing because all of a sudden the buyers that started that move and got beaten up went, no. Come over here. Let's put some more money in. Bang. And then we'll get a massive buy candle. And then those sellers who have pushed down today have gone, screw this. I've got too much money on the table. I'll get out. And they'll turn into buyers and we'll flip back the other way. Every single candle is a 50-50 shot of being a bull candle or a bear candle. Or it could be a doji. Let's call that the 0 on the roulette table. It's either going to be red or black. Occasionally you might get a 0. But 99% of the time it's going to be red or black. Don't know which. Right. So lovely breakouts today, if you got them. Tricky ones to get onto today, but they were very, very good. US dollar CAD has just lit up on the 14 RSI, which I'm monitoring. So we're now extended above the 75 again. So again, that's just extended. You've got divergence there, bearish divergence. I would expect this to probably come back down here before the news. So don't get too excited about the moves today. They probably undo by lunchtime. Possibly. Morning, Neo. IC markets SCY. Monkey Man. Yeah, I mean, they're raw trading limited is IC markets. Oh yeah, of course, yeah. I get when you've been doing this for such a long time and you've signed up with so many brokers over the years, every month on the first of the month, I get an influx of MT4 statements from all sorts of brokers. Raw Trading Limited is one that I keep getting an inbox every month, beginning of the month. I get Raw Trading Limited, send me my account statement, which obviously says 0. And it's IC Markets. There you go. I get loads of them, literally. Must be 20 or 30 I get. First of the month. It's just statements. And they're all blank because they're all brokers I've used in the past. But by law, they have to send you an account statement every month to show what your trading activity was, and obviously send it off to the tax man. So, yeah. That's raw markets. So, yeah, definitely got accounts with them. Do you not look at the FTSE? I don't look at the FTSE, no. You could trade it. It's pretty much the same as the DAX. The DAX, though, has more movement in it. So, in the same way as the DOW, well, it's more like the relationship between these two. So this would be the DAX, that would be the FTSE. See the ADR. ADR is 42 on the S&P. ADR is 246 on the NASDAQ. DAX is 172. The FTSE is smaller. I don't know what the FTSE's ADR is because I haven't got it, but it's smaller than that. So it's kind of like trading those two together. So you could do. I don't have it on the Robo Forex account, and also it's not offered on a lot of prop firms. So I'm finding actually you can kind of trade the Dow in a similar way, I think, to the FTSE in the mornings. The relationship between these two is at the moment fairly similar, but I don't know if that's going to continue because it's earnings fortnight. So I don't know. But no, I don't trade the FTSE. It's just very, very, very slow, which is not a problem. It's a really good instrument to learn index trading on because it is slow. It's like if you want to learn futures, if you trade 6E or 6B, which is the euro and the pound on the futures market, that's the kind of the FX market, if you like, on futures. It's really slow. But it's a good way to cut your teeth in the futures market because you can't get into too much trouble with it because it is really slow. And the FTSE is a little bit like that. But then again, the FTSE will have massive days, massive spikes. I've never tested the ORB strategy on the FTSE. Just haven't done it. Getting a bit of buying coming in, look. We've got divergence across the indices. NASDAQ's just put in a new high. S&P's put in a new low, so is the Dow. There is some buyers starting to come in, look. Actually, it might do, but we'll see. But this is probably more likely this is just profit taking, yeah? Anybody that's short on this is looking at this and going, need to take some profit. So they're just scaling out of some of the position. I'm pretty sure you'll find they've all got limit orders sitting under there ready to go short again. Would slippage make scalping the open candle on the DAX not feasible? It depends what you class as feasible. and what slippage you get. I don't get much slippage. Not a lot. I've got a new version of the EA, which I've been. This is obviously this EA that I'm building is phase 1 of this EA is replicating the opening range breakout strategy. I've got a new version of this, which I'm hoping to finish off this morning, which I'm hoping to use this afternoon, which is actually going to just get in regardless of the ranges. And part of the reason is to test that slippage. So I don't get a lot of slippage. It's usually something like that, which in the grand scheme of things, if you are taking the pre-market open, the difference between that and that could be the difference between hitting target or not hitting target. But what I'm doing, as you can see on this chart here, is I'm plotting 1R and 2R based on the range. So from a targeting perspective, what I've identified is that you get to 1R a lot on the pre-market open. Even if you whipsaw, you will hit 1R in either direction the vast majority of the time. So if that slips down to there, whereas I wanted the entry there, what it will mean is if you take targets, take profits at 1R or 2R targets based on the range rather than an ADR or your stop loss, yes, you'll make slightly less on that slippage. But in the grand scheme of things, the strike rate of hitting that will way outweigh that tiny little slippage that you get. The only time you really get massive slippage is if in instances like today, where the candle closes right at the low of the candle pre-market, meaning that there is an awful lot of selling activity in this case coming in just before the open. So as we open, because we're already selling hard, that extra volume that comes in at the open means that you will get either slipped or in some cases completely miss the order because the brokerage won't be able to literally fill that order in time before the price is gone. In which case then that will become a limit order and hopefully trigger the limit order on volatility moving up and down. But, you know, there's nothing you can do about it. It's just what it does. So it's the same as all these strategies, right? You'll see a load of strategies over years coming out called things like the Night Scalper EA. And what they're doing is they are scalping the Asian session, or they will take a trade somewhere in here. Yeah. Over that swap period. So in the last half hour of New York and in the first half hour of Asia. Yeah, these Night Scalper EAs. They've got amazing profit curves and massive strike rates. You will never get those trades on because at that point, that swap is like that. Yeah, their back testing is not doing that. Yeah, try them on a live demo. They don't work at all. And the ones that trade in this part of the session, the spreads are huge. Therefore, obviously, spread and slippage is pretty much the same thing. You know, whatever you see in a back test, the spread is 5 times bigger. You're not going to do it. This is why somebody was talking about the tick data testing and everything yesterday, and I was, you know, trying to explain about the within tick data, you have a slippage area where you can enable slippage, and you can reproduce slippage positively and negatively at random. So you can introduce this, but this should only be used as a robustness test. So when you've got a strategy or a setting in a specific EA that you like, you should robustness test that. And one of the robustness tests is to test slippage. So let's say I don't get what I wanted. Let's say I slip by 2 pips or in either direction. Yeah, positive, you do get positive as well, but negative is way more common. So you can test all of that, but it would be done as a robustness test. Don't assume you're going to get it. Make sure that your strategy can survive it. Spread. I always use a fixed spread because I always have a fixed spread. My fixed spread it's not fixed, it is variable, but you watch my chart, my spread never goes above 2. Very, very, very rarely will I ever go above 2 on the DAX. So I'm not going to put it on a variable spread because I get 2. So I'm going to use a fixed spread of 2. Yeah. But when you're robustness test with a variable. Yeah. So use a minimum spread of 2 because I will very rarely get below 2. It'll be 1.5, maybe 1 sometimes, but 99% of the time it's 2. And then put a spread multiplier on it. Yeah. So your spread will go from somewhere to 2 to 4 at random. Yeah. If your strategy still returns a positive result with a bigger spread and with a bit of slippage, that's robust. But these are robustness tests. They shouldn't be used for strategy development. They should be used for confirming your strategy works in all market conditions. Part of the system parameter permutation tests. Yeah. So when I'm doing SPP tests, what I'm doing is I'm varying things. So when I'm using a TP multiplier, I'm using a 150 and I'm going up in increments of 50 until I get to 500. So every single permutation of TPs is tested. If they all produce a positive result, it's robust. If only 3 out of 50 tests work, that's not robust. That's curve fit. Curve fitting never works. There is no curve fitting strategy on the planet that will ever work. So that's the purpose of robustness testing, to make sure you haven't curve fit your strategy or your set file that you've produced. And the same with offset distances. I'm testing 1, but I'll also test it in 5 increments up to maybe 40. Yeah. So test all different offsets, which is the distance from the opening range that the pending order is placed, because that is also a good slippage test. Yeah. If it works on 10 and it works on everything from 10 to 40 and gives a positive return, it doesn't matter if I get slippage. I'm still going to make money. That's the purpose of robustness testing and system parameter permutation testing, is to make sure that what if I don't get exactly what that set file says I should get? What if its variance is 20% that way or 20% that way? Do they all give me profit still? Yeah. Okay, that's great. Like RSI. If I enter at RSI 30, yeah, I make profit. But what if I entered at RSI, 30's down there, RSI 25, would I still make a profit? Yes. Good. What if I entered at 35? What if I entered at 20? Do I still make a profit? If all of those still make a profit, what it's telling you is it doesn't really matter where you get in when it's coming down, because if you get in at one of those levels and it goes up, you make profit. If every single one of those makes a profit, it's robust. If only 1 out of those 5 tests or however many you do is working, that's not robust. That's curve fit, because it's not going to get that entry at that level in the future. Somewhere around there, it's going to come down and go up, but it's not always going to be at that level in the future, because what's happened in the past is never going to replicate itself again. So it's all part of the robustness test, which is what I do with every strategy that I have ever developed, because if it's not robust, it's not going to work. And Strategy Quant will teach you that. If you use Strategy Quant software to develop strategies, you will, on Strategy Quant, I can develop 60,000 strategies an hour, which are profitable. When you put them through robustness testing, none of them work. So you have to then you have to test for 12 to 24 hours. You will test million strategies. Out of those million strategies, you'll get a handful of maybe 100, 200 that pass robustness testing. And then you take them through further robustness testing, multiple time frame testing, multiple instrument testing, and then you'll get rid of a load more. After about a week of testing, you might come out with 1 or 2 strategies which look like they've got a long-term perspective. You put them on, you try them, and see how they go. That's all you can do. But robustness testing with any strategy is absolutely critical. Slippage is part of that. Because if you only get slipped, think about it. If you take 20 trades a month, because there's 20 trading days in a month, if you only get slipped on 1 day of the month, that's fine. So if you test your strategy and assume that you're going to get slipped every day, you're not actually testing what's going to happen in the real world. You've got to test what the real world is going to give you. And on the DAX, yeah, my spread is 2. Moving too fast. There you go. So yeah, so that went from 2 to 3 there. Yeah, that's what I get. I'm always going to get that. It never goes like that. Some brokers do, and if they do, switch. I see markets. I don't know what their spread's like. What they tell you it's going to be and what you get, not the same thing. Right. Morning, Roy. Aussie dollar yen. We can have a look at that. Morning, Michael. Aussie dollar yen. So all the yens are coming down today. Big strong yen. So yeah, big strong push to the downside. I'd watch this propulsion gap. I have no idea about this yen at the minute. It's I've got a short on the US dollar yen at the moment. That's the only yen exposure on. I don't know if it's bullish or bearish. Excuse me. We obviously had this big rally against the yen, and it started its pullback, double topped. Now we're putting a new low. So that, to me, potentially is going to be a lower high and a continuation on the yen. It's very difficult to tell what's going to happen with this. It's all over the place at the moment. The Bank of Japan tried and failed to rally the market last week. So this is on Friday last week here. This is where we had the news from the Bank of Japan for the monetary policy statement. Prior to that, the market bought the crap out of it because the Bank of Japan said they might do some extra tightening. So we had a massive buy on the yen on the Thursday. They came out on the Friday and they dumped the market right back down again. And since then, all we've done is pushed against the yen and it's pushing back. So it's just a tug of war at the minute with this. I don't think there's a directional bias in either way on it. So any of these that you take, I think you can get in either way, but get in on the extensions. Wait for the market to be stretched so that you know that they need to get out of those positions. I like that. Yeah. So just wait for extensions. Just don't get in it. Don't get in it because it's. Just don't get in it because. Get in it because of a reason. If you're not using the system or the strategy that I use, get in it when your system or strategy says so. Just don't get in because you want to get in. But if your system says to get in, get in. It's hitting a nice propulsion gap at the moment. So this is off the back of the news. Yeah. So there's your news spike. That is when they decided to unravel the yen. That's where they started. So if the market does not like the yen, they will look to sell here, which means obviously if they're selling the yen, they're going to be buying everything against the yen, which means it will go up. So I don't know. Not really set up for me. If it gets down to here, yeah, I'll be interested. Because that's a fairly nice drop. Look, accumulation, drop, accumulation, drop. If we get all the way down here and we haven't profit take that move, it will pull back into here. And this is potentially here. Look, we're putting a propulsion gap in. So this low here and where we are now with that candle, that's going to become another propulsion gap. So if we push down further through this area, down into here somewhere and look for a double bottom, we're going to have a propulsion gap there, there. There's tons of targets to the upside. It's going to go back up into one of those at some point. So it would be a nice long, but not right now. It's not ready. It's not cooked. Have you checked Trade for Us? No. Haven't. Thanks for subscribing, Renee. Welcome aboard. But I can guarantee I'm going to look at it. It's going to be a prop firm, and it's not going to be as good as my Forex funds or EA. And it's probably going to be run by 8 crap. But we'll have a look anyway. And anybody who puts the word 4 in the middle of their name, I don't trust them for a start. Get funded to trade the markets with 8cap. Wait for it. Oh, who's your broker? Broker. Oh, Ava Trade. Oh, okay. Yeah, no, that might be right. I've never traded with AvaTrade, so I actually don't know because I've never had an account with them. But oh, it's actually run by AvaTrade. Oh, okay. A broker setting up a prop firm. This is a new one. 50 quid more expensive than my Forex funds. Same rules. It's basically the same rules as my Forex funds with 30 to 1 leverage. Need to check the rules out, but I mean they're $50 more expensive than my Forex funds. Actually, more than that, because if you take a retest with my Forex funds, you get a discount of 10% as well. So you're probably going to end up paying somewhere in the region of $80 more for exactly the same thing as my Forex funds. I don't know if they've got a minimum day. Can't really see if they've got a minimum day or not. What's rapid? 3% daily loss and 6% overall loss. Higher profit targets. Oh, no, sorry, no. Lower profit targets. What's that? Why is that? So a 100K account, you got a 10K target for $500. The rapid plan, the 100K account has a 6K target for $400. What's the difference? Plans. Yeah, well, what's the difference? Have I been blind here? Or so it's just your loss limit is different. 3% daily loss instead of 5%. Don't know. Somebody sign up with them. If they're good, fine. But they are more expensive than my Forex funds. So MetaTrader 4 and 5. Fine. Don't know. Broker getting in on the action. That's the first broker I've seen that has actually decided to start their own prop firm. It's interesting, isn't it? I was wondering when it was coming. This looks like it might be the start. So that might be interesting to keep an eye on that one. I shall keep an eye on them. But if you do one, let me know. At the end of the day, because on my prop accounts, all I do is index and support resistance trading. So spread is actually pretty critical to obviously the index trading. So you've got to have tight spreads. So yeah, that's a good one. Good spot, Roy. As you can see from my face, incredibly skeptical at start because 90% of these firms that start up are ACAP. It's awful, but not bad. Morning, IC markets have been pretty jumpy around the open the last few days on the DAX. Very frustrating. Yeah, don't know. The trouble with brokers, I can't really recommend any brokers. The only brokers I can recommend are the ones I use and my experience with them. I use RoboForex at the moment. Axie have been good, but you have to just use them and see what they're like. If they're jumpy around the open, I don't know if that's a good or a bad thing, but if it's delayed market execution at the open, that is just not acceptable. You can't trade it. So you have to dump them and go somewhere else. If you're using IC markets for position trading, it doesn't matter, does it? So you've got to pick the right broker for the right thing. The best broker in the UK for index trading is TD365 because they have a fixed spread. And market execution is instant, but they do not offer MT4 or MT5. It's a virtual, it's an online system. So you have to do all of your stops and everything manually. But they are the best broker, but you can't auto trade with them for a reason, because it doesn't work. MT4 and MT5, the interfaces are a lot slower. You're getting direct access to the broker via their platform. Therefore, market execution is instant, and the spreads are super, super, super tight. But I'm not trading big enough money to worry about that. I'm trading with 8 cap, and their 1 hour candles start and finish 15 minutes past the hour on the DAX. Point in, well, just made my point. You can't have a 1 hour candle starting 15 minutes past the hour. You know, just 8 cap are just terrible. If you see any prop firm with the word 8 cap on it, just don't bother. I've never had I've only used them twice, and I've never had a good experience. It's been awful spread, awful slippage, awful execution. That's the worst thing, the execution. Hitting the buy button and then waiting for 3 seconds for your order to go in. It's gone. I've missed it. Yeah, and obviously if now their candles are broken, you know, just don't bother. And I've never heard anything good about them from anybody that's ever used them. So it's not just me, it's just clear. Can't resist. Blind or blonde? What? I don't know what that means, Wade. Blind or blonde what? I don't understand that one. Morning, Amar. You're late. Right. That's all I've got for you today. All done. There's nothing else to look at. Indices at the moment have stalled and pulled back. So here's the pullbacks underway. So like I said, if you want to measure them, depends how you want to measure them, but the move started sort of around about here. Yeah. We're doing a 50% retracement. Yeah. So if half the market are exiting their positions, that's where it is. If 2/3 of the market are exiting their positions, if 1/3 of the market is exiting their positions, yeah, that's what it's going to be. If it's going to be a continuation pullback, sure, which we don't know, obviously. So I'm not surprised we've stalled out, to be honest, because this thing's shot. Look, DAX ADR, it's very unusual for us to hit ADR right at the beginning of the session. Yeah, that's not normal, is it, on the DAX? That sell-off rally before the market today, that was an absolute fluke, that $3,000. I'll take it. Half of trading is luck. Yeah, there you go. I'll leave it there. Anything you need, let me know. I don't anticipate getting out of anything today because obviously we're waiting for the news at 12 o'clock. So 12 o'clock today, Bank of England rate. We'll get a bit of a whipsaw off of this, assuming they give us a 5.25. And then 12:30, Bailey speaks. So sometime between 12:45 and 1, that's when the real movement will start, when Bailey has confirmed what the forward guidance is going to be. And then after that, we go straight into unemployment claims at 1:30 pre-market, and then 3 o'clock after-market PMIs. So it's going to be a very, very, very hard open today for the US, because we've put in all that volume on the US pre-market. And then we've got 2 news events, pre-market and post-market. So it's going to be a like big finger holding the air sort of day today. PMIs on the UK have just come out as expected. So we just had the UK PMI figures, 51.5 of a forecast to 51.5. Market couldn't give a monkeys, which you wouldn't expect ahead of the interest rate. So anyway, there you go. So I'll be in Telegram if you need me. Otherwise, back tomorrow morning, 7:50, same time. And I'll be back 2:20 this afternoon for the New York session. We trade the DAX, the Dow, and the S&P. But yeah, hopefully you've had a chance to make your money today if you got on those pre-markets, and we'll see what happens with FX this afternoon. But we'll have a look at it all this afternoon, recap it all, and figure out where we're going to go from here. So, all right, so have a good morning. I'll be back this afternoon and hopefully see you guys then.